Social media is flooded with claims about AI penny stocks destined to moon. But what happens when you actually check the data? We took 3 of these heavily promoted stocks and ran a simple experiment. What if a US investor put real money into them at the peak of the hype? Using only verified data from SEC Filings and Yahoo Finance, we backtested a $10,000 investment in each. The results exposed the critical difference between viral narratives and verifiable financial reality. This isn't about predictions, it's about what actually happened. Let's start with company number 1. We'll reveal it through clues, and every single clue is a verifiable fact you can check yourself. Clue 1. This company is incorporated in Delaware and headquartered in Santa Clara, California. Clue 2. It completed its SPAC merger and began trading on the NASDAQ on February 10, 2022. Clue 3. Its business is conversational artificial intelligence with a focus on voice-based ordering for restaurant drive-thrus and phone systems. Now the financial facts. Clue 4. According to its official Q3 2023 10Q filing with the SEC, this company reported an operating loss of $22,900,000 for the quarter. Clue 5. On April 27, 2023, the sandwich chain Jersey Mike's issued a press release announcing a pilot partnership with this company's AI technology. Clue 6. The same SEC filing shows it had $81 million in cash and equivalents on hand as of September 30, 2023. Let's look at the stock's actual trading history. Clue 7. Verified Yahoo Finance data shows that on June 22, 2023, this stock reached an intraday high of $4.44. It closed that day at $4.08. Clue 8. Later in 2023, the stock fell to a 52-week low of $1.20 in mid-November. Clue 9. A major long-term enterprise client is White Castle, as documented in the company's own investor presentations. Clue 10. SEC Form 4 filings confirmed that in November 2023, company executives, including the CEO, were granted stock awards. Clue 11. For a baseline, the closing price on February 21, 2023, a common reference point in our backtest, was $1.72. Clue 12. In U.S. retail investing forums like Reddit/Stocks, this ticker is frequently grouped with other speculative AI names. Clue 13. Total revenue for the first 9 months of 2023 was $24,800,000. And the final clue, its 4-letter ticker is the phonetic spelling of a dog's bark. So, who is this company? A loss-making AI voice software firm with restaurant partnerships, about $80 million in cash, and a stock that swung from over $4 to under $1.25. The company is SoundHound AI, trading on the NASDAQ under the ticker SOUN. Now for our experiment. We used 2 scenarios based on verified closing prices from Yahoo Finance. Scenario 1, the fortunate timer. An investor allocates $10,000 to SOUND at the market close on February 21, 2023. The price was $1.72. That buys 5,814 shares. Scenario 2, the hype chaser. An investor allocates $10,000 at the market close on June 22, 2023, after the stock had already run up. The closing price that day was $4.08. That buys 2,451 shares. We fast forward to December 5, 2024, with SOUND closing at $12.76. Now, the math. For our fortunate timer, $12.76 multiplied by 5,814 shares equals $74,186. That's a gain of 641.9% on their $10,000. For our hype chaser, $12.76 multiplied by 2,451 shares equals $31,274. That's a gain of 212.7%. The difference is staggering. It demonstrates that entry price is everything, especially with volatile assets. But past price is only part of the story. The fundamental risk comes from the balance sheet. We go back to the SEC's Edgar database. SoundHound's Q3 2023 10Q filing shows an accumulated deficit of $570 million. This is the total net loss over the company's life. It is not currently profitable. While it had $81 million in cash, the quarterly operating loss reveals a cash burn rate. This creates a tangible risk of future dilution, where the company may need to sell more shares to raise money, potentially lowering the value of existing shares. This is a fundamental risk for all pre-profitability penny stocks. How does this speculative AI play compare to mainstream options for a U.S. investor? Let's use the same February 21, 2023 starting point. A $10,000 investment in the Invesco QQQ Trust, which tracks the NASDAQ 100, would have grown to about $16,550, a gain of 65.5%, with far lower volatility. What about a large-cap AI leader? The same investment in NVDA would be worth over $54,980, a gain of 449.8%. This context is crucial. While SOUND's gains for the fortunate timer are larger in percentage terms, they came with extreme volatility and binary risk that most investors cannot stomach, the difference between a lottery ticket and an investment. Our backtest of the other two stocks, which we'll cover in a follow-up video, reveals similar patterns of extreme volatility tied to news cycles rather than sustained profitability. The data-driven verdict for SoundHound AI is a high-risk, high-volatility speculative asset. Its fate is tightly linked to its ability to achieve profitability before its cash runs out, and to broader sentiment on AI microcaps. This is not financial advice. It is an educational case study using historical, publicly available data. Penny stocks are highly speculative and can result in the total loss of your investment. Past performance does not guarantee future results. You must do your own research, read the latest SEC filings, and consider consulting a licensed financial advisor before making any investment decisions. If you want us to backtest another stock or strategy using this strict, data-only approach, tell us in the comments below. Remember, in the U.S. markets, the SEC Edgar database and Yahoo Finance are your tools for truth. Use them. Thanks for watching.